Welcome back to CMC Markets Trend Tracker series. Today we have a special edition for you to help you navigate the current volatile financial markets, in particular the mini equities meltdown globally, as well as a savage sell-off in US dollar yen. Now I'll be breaking it down as to why this has happened now, what the charts look like at the moment, in particular focus on yen and yen crosses, and also as traders, what we should look forward to over the next few weeks, culminating in the Federal Reserve meeting across the 17th and 18th of September. So let's start with what's happened. We've had some severe sell-offs in equity markets. Example, the Nikkei 225 index was down 12% yesterday before bouncing overnight. And in currencies, the yen has strengthened considerably since touching 160 versus US dollars a few weeks ago. So why have we seen these collapses? Why now? What has been the catalyst behind these moves? Because as you know, throughout 2023 and in particular 2024, we've seen very strong trends, uptrends in equities in general, in particular US equity indices, the NASDAQ, US megatech shares, the AI revolution. And with that as well, we've seen a bounce back in the Japanese economy last year and also this year. We've seen GDP growth in Japan pick up, wages growth pick up. A lot of money, investor money, has gone back into Japan. And therefore, in turn, we've seen the US dollar appreciate against the yen. We've had those very strong trends for the majority of 2024. So what has happened in the last few weeks and what's accelerated last 48 hours? Well, last week, we had the Bank of Japan increase interest rates up to 0.25%. So they were 0.1, they increased them up to 0.25%. In addition, last week we had weaker than expected US economic data, in particular the US non-farm payrolls data. So we had those two catalysts that came out and hit markets, and then we had the perception that started to increase the Federal Reserve may be behind the curve in terms of cutting rates. Why did that perception come about? We've had the ECB in Europe cut rates twice this year. The Bank of England cut rates once last week. The Bank of Canada has already cut rates twice this year. Similarly, the Swiss National Bank as well too. So what has the Federal Reserve done? They're still waiting. They've kept rates high for longer. Have they kept rates, the cash rate at 5.5%, too high for too long? Well, that is what the market is thinking right now. And you've had some prominent economists out there from JP Morgan and Citigroup come out calling for the Federal Reserve to cut rates by a 50 basis point cut at its September meeting on the 17th, 18th of September. So all this came to a head, and all the trades where investors have been long, such as long US tech shares, long US equities, long dollar yen, started to unwind. And that caused a very vicious sell-off over the last 48 hours. In addition, last night we had a bit of market talk that the Federal Reserve might be close to delivering an emergency rate cut. Now that's quite serious if that happened. I don't know where these things started. The thing is, this narrative is being pushed around. Markets want the Federal Reserve to be cutting rates very soon and aggressively. And if they don't, then volatility will continue to increase. Where to from here? So as traders, what should we be looking at going forward when trading equities, or in particular, yen and yen crosses? So last night we did see two notable Fed presidents, the San Francisco Fed President, Mary Daly, as well as the Chicago Fed President, Austin Goolsbee. They came out, they tried to cool markets. They try to remind markets that the US economy is still in decent shape, and don't focus on just one number, being that very weak US non-farm payrolls data. They also mentioned, in particular Mary Daly mentioned, that the Fed is prepared to act if they get more information and if the economy starts to weaken substantially, more than they expect. So keep this in mind as we move ahead to the Fed meeting in September 17th, 18th. So what we do have now is a situation where markets are in a state of flux, volatility is very high. Do we expect, for example, dollar yen to continue to drop off, or do we expect a turnaround from here, from this point today? Similarly with US equities, do we expect further stock market rout or a nice bounce back. And I think we need to focus on economic data going forward and again on what the Federal Reserve members are saying from this point onwards. So with that in mind, let's jump into the charts and see what all this has done and how it's impacted dollar yen and cross yen. Let's now take a look at the dollar yen chart. You can see here I've zoomed out for you going back almost 12 months. Now, most recently, dollar yen has dropped 2,000 pips or 12.5% since the 11th of July. That's about 3 weeks. You can see how it's accelerated over the last few weeks. And I'd like to highlight there that I do love using the 20 and 50-day EMAs. You can see the EMA crossover happened there early August and prices accelerated lower from there. So a bit of a trend shift in dollar yen. Now, I zoomed out because for those of you who might be looking for potential downside targets, we can go back to the 28th of December last year, that swing low point there of around 140.25. That would be your first level or target in mind. You could zoom out further, and this will take you back to the 14th of July last year, and another swing low point of 137.25. But these are some of the downside targets to look for. Momentum indicators, they're all pretty soft. You can see the stochastics down below the 20 level. So momentum is with this downtrend on the daily chart. For those of you looking for a bit of a bounce or perhaps looking for buying opportunities here, situation changes, then topside levels, I would look at the 20 and 50 EMAs. A 20 EMA resistance level comes at 152.55 and the 50-day EMA comes in at 155.15. So those are levels for you to keep in mind. Very much a downtrend on the daily chart in dollar yen. I've added the Aussie yen chart for you today because there are two things at play here. One, as you know, the yen strength started from BOJ intervention a few weeks ago. Then the BOJ increased rates last week, and the situation in Australia has changed considerably, where a few weeks ago there was an expectation the Reserve Bank may have increased interest rates, but that is likely off the table now with the benign CPI data we had last week. In fact, there are strong calls for a rate cut from the chief economists of Westpac and CBA starting from November this year. So that has added to the downside push in Aussie yen. The chart will show you it's just a pretty vicious collapse here in Aussie yen. A potential downside target might be the swing low point on the 23rd of March last year, around 86.05. For those of you looking for bounces in the Aussie yen, respect the 20 and 50 EMAs. And the 20 EMA comes in yellow at 100.52, and the 50 EMA comes in around about 102.73. So you can see the moves have been very vicious and very quick. The momentum indicators, whether you use a MACD or stochastics like I've used or an RSI, are all very bearish. The RSI and stochastics, or stochastics I have on the chart here, is below the 20 level, which suggests that there's strong momentum in this recent downside move. That concludes my analysis. Thank you for watching, and I'll see you in the next video.